your risk to reward ratio, you want to know what you're risking before you get in. You want to know where your stop is before you get in. The least acceptable risk to reward is 1-to-1. What does 1-to-1 mean? It means you're risking a pip to make a pip. So you're risking 10 to make 10. You're risking 20 to make 20. You've got a 20, for every 1 pip of stop loss, you have 1 pip of target. Okay, so basically you need 50% to break even with a 1-to-1. If you have a 1-to-1 risk to reward, then you're winning 100, losing 100, winning 100, losing 100, whatever it is. You got to be more than 50% to be profitable. Now, if you have a poor risk to reward ratio, say 2-to-1, in other words, you're risking 2 to make 1, so you have a 20 pip stop for a 10 pip target, then you basically got to win 75% of your trades to be profitable. So what we want to do is we don't want to risk more than we were going to take on a trade. Now, we're scalpers, so sometimes, it doesn't always work out this way, but you want to be as close to 1-to-1 at the low end, and you want to be 3-to-1 on the, or 1-to-3 on the high end. All right, so here's an example of 1-to-3. All right, say we have one standard lot, and we're trading 10 pip stops with 30 pip targets. Okay? Now, here's a trader that hits 50% of his trades. 5 and 5 winners, 5 losers. All right, with proper risk management, 5 losers, you lose $500. 5 winners, $1,500. So 50-50, yet he's up $1,000. All right, so risk to reward, it's a very basic concept. You just want to make sure when you're getting into a trade that you're not going to risk more pips than you plan to make. All right, it doesn't make sense to risk 100 pips to make 10. Why? If you win 10 times, okay, you've made 100 pips, but guess what? You lose once and you give it all back. So, I mean, you've got to be spot on 100% really to be profitable. I mean, 95% basically to be profitable with a poor risk to reward. All right, so if you trade with a good risk to reward ratio, your chances of being profitable are much greater, even if you have lower win percentages. In fact, if you had this 1-to-3 risk to reward, you could actually, if we only won 4 trades and lost 6, the four winners would be $1,200. The 6 losers would be $600. We'd still be up $600 and losing more trades than we won. All right, so that's a quick bit on risk to reward.